This is Matt Russell from the FX Power Course, and welcome to the Daily FX walkthrough.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart, let me go in order here, is the Euro Pound, and as I mentioned yesterday, prices could have been drafting a short-term double bottom, and I mentioned also yesterday how we might look to enter this trade and only exit if prices do close beneath that previous low near the 87.85 area. We could see that prices did actually, while I was speaking yesterday, this candle right here was a red candle, actually right at that 87.85 area. But this is why we wait a little bit, wait for markets to close beneath significant technical levels, because we can see prices came down a little bit and then rebounded sharply off that level. So if you are long right now, I would hold that hold the position right now and place our stop. So now instead of about 15 pips or so beneath that low, I would change the low to this candle right here, and the low there is 87.63. So maybe a stop about 15 or 20 pips beneath 87.63. And again, the target here would be initially this high right here, just beneath that 91 figure, and then ultimately the opposite side of this previous support line, which was broken and now should act as resistance. The next chart excuse me, is the Aussie Kiwi, and not much has changed here. Again, bearish off the doji pattern here. Prices came down. The only thing that concerns me a little bit here, assuming you got a good entry, I might lighten up just a little bit on the position. We do have a gap here on the daily chart, and prices could theoretically just been coming down to fill that gap, which they did, and now prices could go either way. So I think the good portion of the trade might be over. The easy gains, if you will, of the trade might be over right now, but I'd certainly continue to hold, but I might just lighten up a little bit. And again, if you don't have a position right now, if you are flat, I would not recommend entering at this point, because again, we want to place our stop just above that 129.35 high, which is the high of the doji candle, and right now with prices just above that 127 figure, that does represent over 250 pips, which is a lot of risk. The next chart is the Pound Swiss, and not much has changed here. This one I'm really just waiting for prices to come down and touch the simple support line. 69.50 is sort of the line in the sand, at least in my opinion, and prices right now just a few pips above there, 69.73. But again, there's no real clear trade entry that I could recommend at this point. The best technical indication would be prices coming down to the longer term support line, where we would look to enter just above the support line with a stop maybe 50 to 75 pips beneath the support line. The next chart is the Euro Swiss, and not much has changed here. Again, I'm just patiently waiting for prices to come and test the longer term resistance line. We did have that bull flag pattern. Prices have broke out but are kind of going sideways here, meandering. This could be just a flat correction. So moving forward, again, I'm looking for prices to move up higher and test that resistance line. This would be similar to the trade I just described before on the Pound Swiss, but just in the opposite direction. We'd look to enter just beneath the resistance line with a stop maybe 50 to 75 pips above the resistance line. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.